The market swings wildly over 150 points, having some declare this is the COVID crash 2.0, but I think it's 2.0. This is Invest with Jacob. Okay, guys, so first, there was no video yesterday. We had a pretty unexpected loss in our family, and I took the day off to spend with my wife. But I am back today, and I am ready to talk about the craziness of the market. So the market raced up to 46.50 today, up like 60 or 70 points, got stuck there, and then ultimately crashed over 150 points down, breaking just below 4,500 and settling around there at the close. It was the biggest swing we've seen since the COVID crash back in 2020, and it has many people saying that this is COVID crash 2.0 and that the Omicron variant being found in America caused the drop today. Now, I don't believe any of that, and I'll tell you why in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get my daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so there was a lot of news out today that Omicron was found in America, and everybody said, oh, that's why the market dropped. Well, if you were in my trading room today, and I'll tell you how to get in there later, it's free, okay? If you were in my trading room at 46.50, I told my traders, if you're conservative, you should take money off the table here because this is likely a top, and we should see a very deep pullback in wave 2. Now, I did not expect a 150-point crash like we got, but I did expect a deep pullback, and I told them this long before the article was released that Omicron was found in America. So Elliott Wave was already predicting a very deep pullback, and then Omicron was the catalyst that allowed it to happen. A catalyst, basically, guys, is what makes the inevitable happen, okay? It was inevitable we were going to get a pullback, and when they got the news on Omicron, that allows it to happen, okay? The second thing is in March, okay, I was already talking about us being extended and needing a big correction and a bigger wave 2. Wave 2s go much deeper than wave 4s do. So we got a very deep pullback in March that we expected and that Elliott Wave was forecasting, and we were ready for it. Now, we're getting this pullback a little sooner than we thought, but the other thing is this is a wave 4. It's a bigger wave 4. It's on the same level as the wave 2, but wave 4s don't drop as deep as wave 2s do. So that's another reason I don't think we're going to see a huge crash like we saw in March, okay? So with that, let's jump into the charts and see how all this shakes out. Okay, guys, so here we are on the 1-hour futures chart, and I've zoomed out a little bit to show you some structure here, talk to you about why we were looking at 48.80 and why we were caught off guard a little bit by the pullback that we're seeing now. So let's start with this wave 3 back here. Wave 3s of 3, which is what you have here. You have a wave 3 of a bigger wave 3 here, okay? This targets the 1.236 extension. And that is exactly what we hit here at this high. So very perfect Elliott Wave, very perfect Fibonacci pinball. It's what we're looking for. We hit the level we're supposed to. When you hit that level, the most common target for the wave 4 pullback is the 0.764 extension of 1 and 2. Okay, so we hit the 1.236, pulled back to the 764 extension and held that perfectly. From there, okay, you would normally target the 1.618 extension to complete this wave. All right, and that points us to 48.80. The structure also pointed us to that. And this is an incomplete structure. We don't have a full 5 waves up here, and that's very uncommon for a move up like this. So for us to be pulling back in this larger wave 4, if that's what's happening, is a little bit surprising given the structure, the targets, and Elliott Wave Theory and pinball. It's very different than we would expect. It ended up topping at the 1.382, which doesn't happen that often, but it can. And we've started pulling back from there. So is 48.80 for this move up here off the table? Not technically. It's on life support. It needs some real help, but it's not off the table. So as we move down here, okay, if this is a larger wave 4, we would be looking to target 44.75 to 44.85 for our wave A down off the top. The reason for that is the A wave of a wave 4 generally targets the 0.236 retracement, okay? And then you get a B wave bounce, and then the wave 4 generally targets the 382 retracement down, okay? So right now, we have an A down, so you had A, B, C for A, and then you have A, B, C for B. And now you have 3 waves down, that we saw today, we're getting a bounce, what I'm considering wave 4 of C, and then I would expect a wave 5 of C to hit this 45.75 to 45.85 zone and find support there to complete wave C of wave A of this bigger wave 4. Is it possible that this is the bottom for little wave 4? It is. It is possible. We have not invalidated here. We are still well within our Elliott Wave rules, but it's very unlikely. We know that when we break the 50% retrace coming down, that it generally does not play out that way, but it can. Remember, I said this is on life support, so this is not our primary count. It is just a count to keep an eye on. When we bounce here, if we bounce here, I should say, assuming we hold 44.75 and 44.85 area, and we start to bounce, we will look at that structure of the bounce. If we get a clearly corrective structure up to this 46.50 area, could go as high as 46.70. If we get a clearly three-wave structure up and start to move down, we will be looking to short this move down in a wave C that's going to target the 382, which is 43.50. Okay, so that is what we're looking at right now. And just so you know, guys, wave 4s generally work like this. The A wave of a wave 4 generally targets the 0.236 retracement. Then you get a B wave bounce that should bounce to 50% or 61.8% of this move down. So you get a B wave bounce that's about half back up, or the 61.8. It can go a little higher, but that's generally where you see it top. And then you get the C wave down that usually targets the 0.382 retracement off of the high. Okay, so for this big wave 3, our retracement level is the 43.50 zone, and that's where we would look for this to bottom. Okay, so what we're looking for today, guys, is we're looking for one more low to complete this C wave down. We think it should hit the 44.75.85 area. Then we would look for a B wave bounce out of there. That bounce is going to give us more confirmation on which path we're on. If we get a 5-wave structure up, okay, we will be cautiously optimistic that we can still make the 48.80 zone with a 5-wave move up. Again, this is not the primary, okay? So we will watch this structure. If we get 5 up, we will look for a pullback in 2. And if pullback holds and holds above the low and starts to rally again, we will look to enter long at that point. However, if we get a clearly corrective 3-wave structure up in B and we start to break down at that point, we will look to short the market. This is one of those times when it's good to short a bull market, and that target will be 43.50. Okay, so when they tell you that the bull market's over, they tell you that this is the COVID crash, I'm telling you, I don't believe them. I think we are still in a bull market. I think that this wave 4, while catching us off guard from this top not being where we want it to be, we topped at the 1382 extension instead of the 1618. I'm telling you that this wave 4 is not something that cancels a bull market or is a market crash. It is a buying opportunity. All right, guys, if you like the information that I put out in this video and you want real-time market updates from me, you need to get in my Facebook group, okay? There's a link down in the description. Go ahead and click that link, and it will take you over to Facebook. Once you get to Facebook, you do have to get approved to get in my group, but the only thing I ask is that you subscribe to my YouTube channel. Doesn't cost anything. It's right down there. Just hit that little subscribe button, okay? Once you do that, I'll get you in the YouTube group or the Facebook group, and this is how you get the most out of it. You click this featured tab right here in the middle, okay? When you do that, you can scroll down and you'll see our documented trades. You can see all the trades that we've made on the channel, and then you can scroll down just a little bit further and you'll see a link to my Slack channel. Now, Slack is just a free chat channel, and I am on there all day giving out real-time market updates. I give out all of my buy and sell alerts. I answer all of your questions. There is a very talented group of traders in there, from the very beginner to the very expert. It is a great place to learn or improve your trading. So come on over, guys, and let's make some money together. All right? Key takeaways for today. We're looking for another low to complete this C wave down towards that 44.75.85 area, and then a bounce up in B. If we do not get another low and we start a rally up in B from here, that's not the end of the world, but I would expect another low into that region before we bounce up in B, and then we will watch that rally to see what kind of structure we get and find out what kind of entry we want to make into the market. Okay, guys, that is the market update for today. I will talk to you tomorrow.